Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The lows from 2019 and 2021, specifically the August 2019 high at 18,850, the June 2021 high at 18,610, and a nondescript high from May 2021 at 18,265, all these halted a decline from earlier this year and turned the market back up. Yet this move higher only lasted until the start of August, when the market hit up against the overhead combination of the flatlining long moving average, currently at 25,185, the short medium moving average, currently 22,300, and the August 2017 high at 25,195. You can see what happened when it tried up through all those. Prices managed to get to the August 2011 high, but failed to close above any of the resistances, and the market headed back down again. However, this time prices reached down only as far as the May 2014 high at 21,610 and the February 2014 high at 22,155, before gathering some resources together during August, trying higher in the meantime, but easily batted down just by the short medium moving average. In late August, the market was pressured low enough by the declining short medium moving average. They briefly tried lower. However, the attempt was quickly snuffed out, such that 3 Fridays ago the market punched up and through the short medium moving average, gapping higher as a start. 2 weeks ago, early in the week, we saw an exploitation of that break higher, but only as far as the same resistances as before, the long moving average and the August 2011 high. However, this time there was a new factor, and that's the declining medium moving average, currently 23,875, had entered from above into the frame. This looked like it might be a repeat of the action back in early August, when prices clashed with the declining short medium moving average. Yet the action 2 Fridays ago saw a significant move higher, closing over the medium moving average for the first time since early June. However, once again, the move higher was stifled by the flatlining long moving average and the August 2011 high at 25,195, such that from the high water mark of last Wednesday, prices have dropped back below all the moving averages and halted by the February and May 2014 highs, as well as the 2-point uptrend formed since mid-July, and that's currently at 20,955. So where does that leave us now? Well, we have one pattern formed already over September, and that is a possible island pattern, though a hugely lopsided one, with a gap on the way up on the 8th and 9th of September of 21,900 and to 22,290, and a tiny gap on the downside on the 22nd and 23rd of 24,300 to 24,250. I'm not completely happy with that pattern and will reserve judgment on it. Meanwhile, something I mentioned last time is becoming more of a reality. I said last week, and I quote, "The action since mid-July is reminiscent of a possible ascending triangle, though as I said earlier, it is still early yet. This also goes for any idea of a bull channel." End of quote. The idea of an ascending triangle, currently at 20,955 to 25,185, is seemingly the key to the current situation. It is still too early to start looking at targets and whether a break is genuine or not, but the pattern build-up looks good, and I would suggest keeping a close eye on that triangle, ascending triangle. Keep a close eye on that going forward. LME 3-month zinc. I'd often spoken about how I had on occasion taken a step back and looked at the monthly charts to get a better picture. From these occasional actions, I had noted 2 patterns in operation. The principal pattern was the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork were at the end of May and the start of June, when the market approached the middle time from below, currently at 40.77, and was rejected. And then again in mid-July, when prices moved down within sight of the lower time below, currently at 27.48, before taking fright and moving back up. This rise was capped by amongst others. The flatlining long moving average currently at 35.94. The declining medium moving average currently 33.80. The 50% Fibonacci line of the April to July move at 36.82. And finally the second pattern, the lower trend line of the large 2020 to June 2022 ascending expanding wedge pattern currently at 37.40. This pattern broke down in June, saw a retest up to the trend line in August, and a subsequent drop that includes the outside week of 2 weeks ago, and the subsequent follow-on lower. Let's now look and see what this second pattern, this ascending expanding wedge pattern, has left us with. Well, the primary target has been achieved, but the secondary, much harder to reach target X1 at 2082, is below the bottom of my daily chart and is alive, still alive, and out there, though it is way lower. Now, looking at the prospects for this target X1 being achieved, I would say it would be fair to treat this at the very least as a longer term target prospect. There are a few more immediate patterns that I'd like to discuss prior to that. Now, the first of these is the May to August bearish Andrews pitchfork. This market is currently in between the upper tine, which is currently at 33.64, and running roughly along with this tine is the declining medium moving average, currently at 33.80. Whilst below we have the middle tine, currently at 26.92. This is emerging from being an early bearish pitchfork, but this whole pattern is emerging from this early bearish pitchfork, but it has some merit, so it's worth keeping an eye on. Now, this lower tine, this market now is like awfully close to the lower tine, currently 27.48 of the bigger 2014 to 2020 bullish Andrews pitchfork. That's currently, as I say, is 27.48. It is these two that will be key as to whether the market can have a crack at target X1 below, or will it be something else? So that's the longer term bullish Andrews pitchfork, the lower tine, and the bearish Andrews pitchfork that's from let's say late May to middle of August. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.